Yo, doing a little live stream. I was looking at some option stuff today, so I am going to just share what I'm looking at. Hold on, I'm just gonna make sure I share this with the community. All right, so I'm gonna share my screen and just show you a couple things I was looking at today. All right, first of all, go to the cockpit here. So this is a little look at what's been going on. What's going on for the last month, and you know what? Also, I'm gonna put it on Twitter. Like maybe as I'm talking, if people want to ask questions on Twitter or whatever, I might be able to get to them. I'll see how well I can multitask here. Uh, I'll put a little note here. Keyboard's acting really funny. I probably invited the devil in when I said, go ahead, ask questions. I'll try to answer them. But all right. So, okay. So today I was looking at, last night I looked up Citrini's uh, top 25 trades for 2025. And I pulled out some of the names he was bullish on, some of the names he was bearish on. Uh, and I figured, we could take a look at some of these through the Moon Tower lens. So I populated some of these names here, are things he was bullish on. Some of them were he was bearish on. I pinged him yesterday. He was pretty busy, so he was in a. Because I kind of wanted to figure out, like, do you want to update anything you want to update? But he's jammed up. But like, one thing he did say, he likes the XLV long versus the XLF short. But we can look at a couple different ideas that he had here. But also, I got some of my own ideas and just from poking around. Well, the first thing is I populated some of his ideas are part of this list. So what I do is here I go in here and I can like go in and like, so he was bearish home builders this year. So I got some of those names checked. I also got the home builders ETF checked, which is XHB. That's this guy. And so that was one of the ones he was bearish on. So we're going to look at that. Let's go through some of the things that, because I already looked at this morning. So I'll just talk about some things that popped out to me. One thing is like this lens, and we can help like, turning an idea into options is like the relative strength of like our platform and what I do. But I don't start with a lot of opinions about single stocks. I don't really know anything about fundamentals. So it's very helpful if, it's actually kind of cool if you have like an idea about a single stock. If we have it on here, I can look up the vol surface, give you like my 2 cents on like what I think. So it's pretty synergistic with people having opinions about stuff, because we can kind of say, well, how could you express this in options, or does the options market agree with maybe what you're saying? But let me just go to. Sorry, I'm doing I got Twitter open. I got Citrini's, the summary of his Rex open. I'm trying to keep I got everything on like this one big screen. I have a 48-inch monitor, and it's not enough. Okay. All right, so let's go to couple things that I thought were kind of cool. First of all, let's look at this XHB. He was bearish to home builders. So we can go down here. So what I did here is you can go in, I populate the names, I save the list. So this list is now saved. So anytime I go to another tab, this set of names is what's going to populate in the tools. So if I go down here to XHB, click on XHB, we're going to go to XHB tab and see a couple things that stand out. I have my brokerage account open too, so I can go in and check the surfaces. So first of all, this grid here tells you can see like on the left, you got the delta of the option. So 90 delta means the 90 delta call. This is all call. So this you could think of it as a 10 delta put. So this area is like the downside, your 50 delta, and then this is your upside part of the region, part of the surface. And then you've got and then these are the expirations on the top row. And then so this is the change on the day. I have it normalize off and ratio. What does ratio mean? That means the percent change in the vol. I know that's like a running joke, but it's useful. It's kind of useful when you're looking at a whole bunch of different names on one table, because if vol goes up a point and it's 20 vol versus vol going up a point and it's 120 vol, there's a big difference there. So percentages just kind of help you get a sense of proportion between the relative move sizes and the vol. But you could just go click, and these are like the click changes in the vol. So this vol is up half a click. So this is saying XHB. This is the regular April 17th is the regulars. So vol's up 0.4 in XHB and 0.4 clicks. And if you normalize this thing, you could like pick a fulcrum date and it would normalize, meaning that it would scale everything to that move. So remember, like by square root of T. So if you normalized everything to like say a 3-month option, that means like if your 3-month option is up 1 vol point, if you're you would scale like a 12-month option has 4 times as much time to expiry, and the square root of 4 being 2, that means that if you had a 1 vol point increase in the 12-month option, that's pretty significant. So if a 3-month option is up a vol point and your 12-month option, if it's up a vol point, this thing would display it as saying that it's up 2 points, because the point is as trying to show you on a relative basis what happened. So if you scale everything to the square root of T, you can get a sense of proportion between vol changes. So if a long-dated vol moves up a point, that's a big move relative to like a 3-month option moving up by a point. So that's what the normalize does. It allows you to normalize across square root of time. The little neat thing about that is if you normalize by square root of time, that actually tells you what happened to the straddle spread. So it actually maps back to prices. If you normalize and everything is unchanged once you normalize, or everything's up the same amount normalization, that means that the straddle spreads actually haven't really moved, which is kind of what you care about, because we're always thinking in terms of vols, but at the end of the day, your P&L is a function of prices. Did the price of the option go up or down? And by normalizing by root time, you can say, oh, these straddle spreads, these time spreads expanded in value or they declined in value. So XHB here is vol hasn't done a whole lot today. It looks like the fronts, we're not normalizing here. We can see that, through April, vols are up a little bit. If I normalize, well, there's no point in normalizing. This stuff is basically unchanged. And you can see where on the surface. By the way, this is a strike vol change. So what this is doing is saying, this is not like, because it's dangerous. Like if you think about like, or you don't want to think about like floating vol, like when stock goes up, if stock goes up and vol goes down, that could just be movement along the vol curve. That could mean that the strike vol is actually unchanged. This is, hey, whatever yesterday's 30 delta call was, on yesterday's days, like not right now's 30 delta call, like the stock might have dropped and that call might be 27 delta today, but this is saying what happened on yesterday's 30 delta call. So this is a true strike vol change. So yesterday, this is saying like you went from 32.2 vol to 32.6 vol on the 105 strike. So that's kind of what they're saying. So this thing tells you what's happening in the vol. Not a whole lot going on in XHB vol today. It's like, looks like it's up small. This is your forward vol matrix. Kind of talked about this before, but this is like your implied forwards between terms. This is your flat out term structure. But one thing I'll point out here, look at the vol cone on this guy. So this blue line. This is a neat idea. Like, it's a good thing to look at. So this is your median realized vol. So this is saying like over what's your median vol over various history. So like the history of 30-day realized vol for the past 3 years. The history of realized vol for the past 3 years. And that's overlap. It is overlapping, so it's not quite as much data as it sounds like. So it's like a rolling 30-day realized vol. It's saying what's the lowest 30-day realized vol we've had, like over any 30-day period in the last 3 years. What's the highest? That's the min max. That's the red guys. And then you've got your 25 and 50 at 75th and 25th percentile. You have the median, and then you got the current. So your current 30-day realized, you can see like XHB 30-day realized vol. This is saying it's 24.37, but your IV, this is your IV curve, basically overlaid in the same chart. So you can kind of see there's a big premium right now to the front months and XHB. So if you marry this idea with, and actually down here you can see it too. You've got like the realized vol percentile is towards the higher end on the 30 day, and then your IV is and then your VRP is really fat. Like, given what realized vol percentile we're in, your VRP is really fat. You can see how fat the VRP is here. So Citrini said he was bearish on home builders. So on this move down, if you wanted to continue bet on the move down, you probably don't want to, looks like vol looks high to me here. So like you probably want to sell calls, or, it depends on like how far you think it could go down. It's been going, it has been going down this year. So there's all kinds of things you could do that are like short vol expressions of going down. You could buy a 1x2 put spread that would expose you to like being short 2 options on the downside. But you could also do like you could do a 1x2 butterfly, or like a butterfly, where you buy like the at the money, sell 2 downside options, where the sum of those like have a lot of vega, and like buy like a further tail. So you could kind of like you could sell calls. I mean, if you're bearish and you want to take advantage of the high vol, you could sell calls. Basically any short vol expression. And right now, like, because the premium to the IV is super fat in the front, like you might want to lean towards picking a short option that has more gamma in it than vega in it. So yeah, and you can see the implied vols here. These are kind of these look fat. Term structures descending, kind of what we see down here. And if you go to the dashboard on a relative basis, yeah, so again, just the names that we're looking at populate on this guy. So you can see the steepness, or remember what steepness here? This is the ratio of your 6-month vol to your 1-month vol. So this is like the average of all these guys is 83%. It's right around 83%. As of like, this is updated 15 minutes ago. So so you could think of like there's like a 15-16% discount to the back month. So if the front vol is 20, the back month vol might be something like 30. I mean, 17. It's like the front month would be 20, the back month would be 17. That would be a 15% discount. So what you would expect when vol is really high is you expect that there would be big, like the term structure would be very descending and the discounts would be pretty steep. And you can see XHB, it's like middle of the road. It's like vol is really high and it's middle of the road. I probably would expect it to be a bit more descending. So maybe there is an argument there for that back month being still too high. And if we go to the VRP, if we go to the real vol tab, and we look up, then you can see XHB up here again. You expect, so the VRPs right now, interesting, like they've expanded. We're in a high vol regime, and your VRP is actually positive. So there's still like a risk premium above the fact that we're realizing a high vol. Oftentimes when vol gets really high, you expect things to kind of be down here where the implied vol is trading cheaper than the realized vol, but that's because there's, a reversion to a regular vol regime is kind of baked into things. So, if you're looking at that and you're like, oh, these vols are cheap, like they're implying lower than what we're realizing. Well, it's like, yeah, maybe you end up winning for a couple days on like the gamma theta, but you have like negative directional edge because you would expect that IV is going to fall. And like there's no obvious trade there. It's just kind of like what's the speed at which you're going to be negative carrying on being short gamma versus the speed at which vol relaxes. And it's like there's no guarantee vol relaxes. You could stay in this regime for a long time. So I'm not saying that there's a trade there, but it's more like this is what's normal, is that you would expect this to go from the upper left to the lower right as it does here. So XHB here these are standard deviation lines, these dotted lines. XHB vol is, so XHB VRP is really fat. Like we saw that on the vol cone chart. It's very fat and at a relatively high vol. We're at the 75th percentile of the realized vol of 30-day realized. And the implied vol is a significant premium even to that. So yeah, if you're bearish XHB, selling calls, probably a decent expression. It's probably a really good expression because you get to be short vol and you can get your short delta. One thing I do, and this is like as I'm getting ideas, I kind of like I don't know, I'm like a play with markers, man. I got kids, so it's very simple. You can look at a thing like this, right? And it's just, hey, what do I want to be long or short vol or long or short delta? It's just a 2x2 quadrant, right? So, you go in here and you're like, okay, I want to sell. This is like a good way to just keep your thoughts organized. So it's like XHB, I want to be short delta, short vol. So, you kind of just go right there, bang, XHB. And then like you just put it in there, short vol, short delta. It's like no, you can't be any dumber than this. So like super easy. And then so that just kind of keeps track of. So I kind of like go through names and I look at this. I call this an axe list. Like we, in the thing we like gave people like a really simple spreadsheet template of that, or you can make your own, obviously. But the point is like you keep these things kind of handy. You keep like your axe list, your shopping list handy. You know what you want to do, and then you can kind of look and be like, whoa, I'm going to look today. And then I looked at that. You look at we looked at this chart before. I'm going to go back. Just hit the back button there. No, let's go back to XHB. And we see what happened, the change in the vol. Say like, whoa, if I expect, so these front month vols are up today. So it's like, if I'm on my shopping list, I want to be selling XHB vol. And I notice that it's up today. Today would be a good day to take the other side of flow that's coming in to buy. It will be more ambiguous if you want to sell XHB vol and vol's like down a whole bunch today. Do you want to, is today the day to chase it or not? It's kind of judgment call you can make, but you could just see like, hey, vols, I want my axis to sell, vols up in the region that I want to sell. Remember, I want to sell more in the near dated because I kind of like it's more of a VRP angle than more of a gamma angle than a vega angle, right? So all right, that was like one thing I was looking at. Another one that looked go back to that dashboard. All right, another one that you can kind of things are kind of moving around to just update it again. Disney was another one that looked kind of fat to me. So it falls in a bunch in Disney today. And then, what I do is like, I look here, I look at IB too, just to like cross-reference it. Like what's IB saying on the actual option chain. And IB does confirm like the vols are in the front are getting pounded in Disney, despite the fact that Disney's down today. I saw it in the cockpit that it was down. Yeah. Disney's down 4.6% today. And this thing and the vols are down today, but that's just because it's probably just inheriting the fact that Vols are soft. Vols are softer. I guess we like bottomed earlier in the market generally. So probably you must have earnings somewhere in here. You got this. It's either a bad print or you got earnings in there. But here, same thing. Kind of like the vol looked high on the longer dated to me. It's not like that long dated, 60 days. But this was what I thought was interesting. Like Disney longer dated vols looked kind of heavy, or kind of looked fat. That was what popped out to me on this thing. Is like on a long, on a 90-day realized vol, the maximum was like over 31%. That's basically where your IV is pricing. So you got a lot of wind at your back. You don't have to be short gamma. You probably don't want to really be short gamma in Disney because the vol's in today, despite the fact that it moved a whole bunch. Like the front month's in a ton today, despite the fact that the stock is down a bunch. So, and this thing is showing you that like, hey, your implied vol is like not that much higher. It's not that much higher than your realized vol. The way we're moving. So this is more of what could be interesting here is actually selling a calendar, because you could basically buy the near dated, sell the far dated, and as the market relaxes, like you'll lose on this, but if you're short Vega, there's an opportunity to make a lot on your Vega on your vol coming in there. So that would be. And today, it's actually the whole surface is kind of, this is going pretty far out in time, like January. This is looking out in January. So like the surface is kind of giving you the trade. It's like vols are down in March and April. And it looks like it's, 9 months out. It's up a bunch. And Disney was a name that Citrini was bullish on for this year. So you just kind of reverse the logic there. You could say, I want to buy calendars. So you could sell long dated puts. If you wanted to do it you could sell long dated puts, and buy near dated puts. You could buy near dated at, sell long dated puts. Basically you can dial in exactly like surgically whatever delta you want, but just use the perspective of what's a good part of the surface to be buying or selling. And again, Disney looks like it's kind of giving you the trade, because it's like that near dated. Well, part of the reason it's giving you the trade is like this near dated stuff is down so much that it's giving you this like relatively this term structure here. So that's Disney. There was, let me go back to this guy. CCI looked. I saw Comcast on here. Comcast is like, again, like I don't know anything about these stocks, so it'd be good if like somebody had opinions on these things. That it's good if you have opinion about these stocks. You could say, yeah, the options market is priced like this, but that makes sense because I have some context. I understand what's going on in the stock. I know the story. For me, I'm just like looking at what the options say, but it's best if you marry it with context. You actually know something about the stock or you have an opinion. So look at CCI. So by the way, the reason a chart looks like this, where you get these like flat lines here, that's because CCI doesn't have weeklies. So you just have the regular monthlies. It doesn't have as full of an options market. So because this thing's like basically choosing the same option term for both, because it's like the only option that exists between the two. This must be the same ones. So, but here, what are you getting? Again, your median realized vol. I mean, your whole vol structure is pretty expensive compared to how this thing typically realizes. Now, again, I don't know if there's something going on. CCI, I don't know anything about the stock. So maybe the context says it's justified, or maybe you got an opinion on it and you're like, hey, I want to, Citrini's bearish on this name. I mean, you got this giant vol premium in the stock. Maybe the market's bearish on this name too, or the market thinks that there's something up with this thing. So, if you want to fade that, you could sell vol. Maybe you could sell vol and be bearish by, maybe your attitude is, hey, the options market's really expensive. I am bearish, but again, I could sell calls. Or maybe you're like, hey, if the vols are so high, maybe people are well protected in this name, and if it goes down, vol's going to underperform, but you still think it's going to go down. So again, you could buy a put spread, like a ratio put spread, so that you're not long vol by buying the put spread. So that's, and again here you kind of see it, like typically when the real, this is like your realized vol percentile, and like, yeah, there's small sample size here, but when your realized vol is up this high, like on a percentile basis, it's like the VRP usually isn't that fat. This is, by the way, this is a typical chart, like upper left to lower right. When vols get really low, VRPs get really fat, and that's because the market thinks that vol, you know, it's a biased coin. Like IV is probably going to go up from a low level, so the VRP will reflect that, and vice versa. Vol is probably, when realized vol is really high, that's usually going to coincide with IV being really high. Vol is probably going to come in, just actuarially, but so the market is like prices. Like another way to think about this is like if IV was really high, like, and realized vol was super high, that would feel like a pretty easy trade, because you're like, it's really hard for realized vol to go even higher than it is, and if I'm wrong, I still have a margin of safety. Like, yeah, the market doesn't like to give easy trades, so this is what you expect. But again, like, you scatter plot it and you kind of see this guy's a bit off the picture here. So if you got an opinion on CCI, a vol short in it probably is a good way to express it. So let me see what else I got here. Let me go back to the cockpit real quick, because I posted this picture up here before. I posted a picture of this up here before. So this is the change in the last month in these names, normalized to what the vol was a month. So like NVIDIA, this is saying, like, if I go over here, it says, okay, your implied vol a month ago was 62. The market dropped 16%. That's a 1.2 standard deviation move. The way you take, and again, like, I'll repeat it all the time because you can't get bored of arithmetic, right? So whatever the vol move is in a month, like if you move 5% in a month, the way you annualize 5% so that you can compare it to if you annualize it to a vol, is you just multiply by the square root of 12, or 3.5. So if you have a 5% move in a month, that's about 16, 17%. If you are a 16 or 17% asset and you moved 5% in a month, that's like within within the standard, like that is a standard dev. So let's see. So yeah, the other thing here is, like, I'm kind of looking at a little bearish on oil. This is just me playing macro jerk, just saying, like, if the economy drops, oil tends to act really silly when we go down. Vol kind of rips up, and XLE hasn't responded all that much. Actually, if you look XLE in the last month, it's down 1.2%, and so relatively it's held up pretty well. And it's 30-day IV change, like, hasn't really moved in the last week. It is up a bunch in the last quarter, and overall in the last 3 months it's down 3.9%. So it's down a little bit, but on a relative basis, it hasn't. Actually, we can sort this thing by Z-score, right? So these are your 3-month moves, Z-scored. So XLE hasn't. Well, I'm not looking at the whole market, right? I'm just looking at this list. So this is a very small section. We can actually, I could just select all, right? We can have a look at everything. It takes a second to populate, but then we can go down. We're going to look at XLE. We can see it right here, right? XLE on this whole list. Like, XLE is like down small. So if all this stuff is like concerned about growth or the economy, if you, especially like if you look here, all this stuff that's up is all this. It's like FXE, you know, KWeb, Fez, IEF, SLV, gold. Like a lot of this stuff that's actually up is not corporate. They're not like U.S. stocks. So XLE's held up really well compared to the overall market. And if the whole market is concerned about growth, I feel like XLE could be, it's kind of like a catch up trade. It's like, is this thing a catch up trade? Or like, is the risk reward on this thing? If we have a second leg down, does XLE actually respond to that? So question is let's have a look. Is XLE from a vol perspective attractive to trade? Let's go click on that guy. Go in here. Vols got hammered today in XLE again in the fronts. So it's kind of, this pattern is like showing up everywhere. The fronts are kind of getting hammered, and the term structure is kind of descending here. Yeah, and I look at the vol cone, which is like, it's probably, the vol cone is like one of the quickest ways to get your bearings. So these are the blue line is the current IV, is like the current IV. By the way, it looks so steep here because of the scale versus it doesn't look so steep here because of this scale, but it's the same numbers. So yeah, you're like, it's kind of in line, right? Like you got this 60-day option, 90-day option, like they're kind of priced at where a median realized vol for that length of time is over the last 3 years. So these options actually look reasonably priced. So if you're looking for, if you think there's going to be a second leg down that is global demand driven, and you think that energy stocks are vulnerable to that, this is not bad stuff to buy. You can kind of go out a little bit in time, and it's actually pretty attractive to, especially on a relative basis. And let's do that. If we go on the dashboard, let's see if we can find, this has still got my saved list in there. Select all. All right, so this is everything on that dashboard. Everything's clustered up here, like super high vol, right? But XLE. So one of the little things I do to find it is I go to energy over here. I just kind of click that, and I can actually spot it. It's in the mess here. So the vol is high. It says the vol is high in there. So let's just do this, and then we'll just click energy, and we'll see them. We'll see all the energy stuff. Yeah, there you go. So energy steepness. So the front month vol is high, but as you expect, you're kind of like, you got the descending term structure. So this guy is down here at you're getting a 12% discount, as a percent of the vol, not clicks, of course, from the 1 month to the 6 month, right? You got the descending term structure there. So you kind of get XLE. OIH, you get a big discount, but that's because the vol in OIH is super jacked, because OIH has actually gotten, I think it's actually gotten kind of hammered. If we go back to the cockpit, I do the same. And this is like, the reason it reverts back to this is I still have that list saved. So every time you go to the tool, it's just going to look at your save list. We're actually adding the ability to have an unlimited number of save lists. So I could put like, here's this sort of Citrini portfolio. Here's the Moontower portfolio, like the Moontower watch list of stuff that I got my eye on. And so you could have whatever number of lists you want. You could put up, maybe you put a whole sector, especially as we're adding more and more names. You put a whole sector up there, and you could put its index up there, and you could be able to see everything, just everything that goes together in the tool by itself. So let's go over here to energy. Yeah, just to see. Oh, but then I gotta unselect all, and then all right, there we go. So in the last month, yeah, so see, energy in general hasn't gotten whacked too much. Like OIH down 1 standard dev, a little more than that. XOP down 1 standard dev. USO down 0.8 of a standard dev. And XLE just holding in there, like we said before. So Energy overall holding up pretty well. I don't know, maybe somebody that pays attention to the oil market could say um, if the pressures are coming off of Russia, if that means anything for extra supply. That would be pretty sick double whammy if like you're getting if you're getting like US demand growth slows down and there's a possibility that the supply side of the ledger kind of picks up. I mean, um, you could have some real nitroglycerin on these on XLE puts or oil puts in general. So anyway, I think that's kind of all I want to talk about for today. So uh, anyway, I do this. I have done this for like the last 2 days with in the Moon Tower Discord. I'll look at Twitter real quick. Hold on, see if I'll look at Twitter real quick and just see if anybody posted anything. Yeah, no, there's no questions. So that means I could bounce. All right. All right, guys. Thank you so much.